Let's now explore how potential reforms to capital gains tax could reshape the property market and what that could mean for buyers and landlords alike. For more, let's bring in Gianni Musumeci from Leverage Property Advisors. Great to have you on the program, Gianni. Talk to us about reducing or removing the CGT discount, what that could do for landlords.
Look, in terms of the impact that it has to landlords, I find that providing that the capital gains tax discount is going to be grandfathered in, meaning that any existing owners will get to keep the discount, then that would essentially mean that they are likely to hold on to that asset for a little bit longer because of the discount that's involved, and they'll want it for that property to appreciate more prior to selling. What this means is that there's going to be fewer established rentals that are going to hit the market because fewer investors are likely to sell, which is likely to tighten rental supply in a period where we've already got ultra low vacancy rates for renters at the moment.
Yeah, it's been a really difficult time for renters, and the idea that something could change to make it even worse. So what implications might these reforms actually hold for prospective property buyers looking then to get into it, as you say, if it's grandfathered?
Yeah, look, for the new property buyers, providing that that capital gains discount isn't tapered or it's not grandfathered in, again, the new property buyers are likely going to have a little bit of a shorter supply in terms of what they're looking to buy. Because there's going to be fewer listings available, there's going to be fewer investors because investors are going to be less likely, they're going to be a little bit more reluctant to go in, and as a result of the fewer listings, there's going to be more competition for quality stock. So some owner occupiers might benefit. At the same time, again, the tenants are going to be the ones that are likely the victims here because there's a reduced turnover in stock on the market.
The big fear, though, is for the current property owners who got into this believing that CGT would remain in place. But as you say, if the CGT changes are grandfathered, what would that mean for current property owners? Because some are saying that they're already looking to sell to try and get out ahead of any potential changes.
Yeah, look, what I would say is if you are looking to sell ahead of any potential changes, don't do it based on rumour alone. The government has been very tight-lipped around changes to capital gains tax in the news lately, and my recommendation would be don't do it based on rumour alone. Wait until these proposals are actually raised to Parliament and voted upon, and then if that's going to impact you, have a chat with your accountant as well. I feel that existing investors keeping the current rules in place, even if they have less reason to sell because of those grandfathered assets, holding on to their property is going to be more and more likely because it's going to appreciate more in value because there's going to be less stock on the market.
Yeah, and really it's about focusing on that budget night because that's generally where these sorts of major changes are announced. Do you think these proposed reforms will actually be implemented? Or, I mean, we've been talking about capital gains tax, negative gearing for such a long time, and the Labor Party and the push, obviously, to try and balance the budget, which is becoming more and more difficult. And therefore, imaginations start to turn to how can they make money. Generally, it heads to property. But what's the likelihood that it will actually happen?
Yeah, look, it seems like every election almost that this is being raised, either capital gains tax or negative gearing, and so it's easy to speculate, but I'm a little bit reluctant to put a figure around whether or not it's going to be pushed over the line. I would say that there might be some changes, there may be some tapering down of the capital gains tax discount, there might be some grandfathering, but I think it's easy to speculate and there's a lot of uncertainty legislation-wise.
Yeah, and what challenges do you think could arise during the reform process? So obviously there's uncertainty, there's the threat that potentially investors may hold back, there's the threat that current investors may sell early as well. What do you see as some of the other challenges?
Look, I think if investors are negatively affected, they're going to potentially rush to sell their property prior to these changes being implemented. As soon as it's raised to Parliament, you might see that investors will start to list their property. There might be a bit of a market downturn as a result of a sharp increase in the supply of property. So that being said, there might be some initial reaction in the marketplace, and if anything, I think investors just need to consult their accountant to ensure that they're not too negatively affected as a result.
Really good advice from you there, Gianni. How can people find out more from you?
Yeah, look, all my social media handles at Leverage Property Advisors, and you can reach out to my website, leveragepropertyadvisors.com.au.
We always appreciate your insights right here on Ticker. Gianni Musumeci, thanks for joining us.
Thank you so much. Thanks.